Welcome to this webinar on the Clearing Connectivity Standard. We're going to go into a lot of detail on that over the course of the next 45 minutes to an hour and take your questions as well. I'm joined here by my colleague Karel Engelen, who's Director and Global Head of Technology Solutions here at ISDA. Also joined by two people from Sapient, Jim Bennett, who's the Managing Director there, and also Phil Matricardi, who's a Senior Associate there, who will take us through a lot of the details on the standard. Also delighted to be joined by Judd Baker, who's Senior Vice President for Derivatives Product and Strategy at Northern Trust, and Northern Trust has been an important part of this process from the very early stages. ISDA, as you know, is the Global Association for OTC Derivatives and Cleared Products. We are focused in many ways on standardization, whether it's documentation or more recently in the technology area. Also focused on automation for financial markets. A lot of that has been focused over the years on the development of financial product markup language, as well as efforts more recently as regulations kick in the U.S. and in Europe on data and reporting, and Karel Engelen has been leading those efforts from the time we took over FPML over 10 years ago from a consortium of banks that have been developing that. In many ways, the Clearing Connectivity Standard is just a further iteration of that as a next step as we move forward with automation, particularly in light of regulatory demands around the world. So this fits very clearly in our mission to develop safe and efficient markets to facilitate the ability of market participants to document trades, to clear trades, and to manage risk effectively. The largest part of our membership, in fact, is non-dealers. Almost 40% of our membership is in our subscriber category, and this is an initiative, the CCS initiative, is one that's focused on the non-dealer community. There's a high degree of board support for that, and we're delighted to be working on this with Sapient's Global Markets. Jim and his colleagues came to us almost a year ago with the idea that the many efforts that they had already put into that leading up to that point would be best taken forward, they thought, within the ISDA and within the FPML framework, and we were eager to work with them to do that. We announced that last fall, and since then we've been working very closely with Sapient to develop the standard further to cover additional products that you'll hear about from Jim and from Phil. So we want to particularly thank the several custodians who've devoted a lot of time and effort and resources to the effort so far, and no doubt will continue to do so. State Street, Neil Wright had been very active in that as it was being developed. You'll hear from Judd at Northern Trust. He's very knowledgeable about what has been done and what needs to be done, and also back at New York Mellon, where Mike Landolfi has been very actively involved. There are others who will help to take this forward, working with ISDA, working with Sapient, but we did want to particularly acknowledge State Street and Northern Trust and Boney. You have the presentation, hopefully, on your screens. We'll be taking you through that. Phil will go into a lot of the detail on a separate spreadsheet that we've been working on. But let me turn it over to Jim Bennett, who has worked very closely with us as we've taken this project forward within ISDA. Jim?
Good morning. It's Jim Bennett here. I thought it might be just a little history to this, and I think Judd will kind of follow up with some additional color on this. But what we found out about a year or so ago is that the custodians came to us within Sapient and highlighted that there was a gap, there was a need that they saw from their vantage point that needed to be addressed, and then they asked us to participate with them as an independent provider here. We're not representing any what I would call vendor or product or basically any organization. So we had a unique position within Global Markets to help facilitate, what that gap might be and some ideas to address that gap. And so a little context to this is that basically the custodians Bob was highlighted, which is Boney Mellon, State Street, and Northern Trust, provide valuable services to their client base, mostly asset managers and hedge funds. And those asset managers, as the migration of OTC derivatives to the CCPs, have to deal with multiple FCMs across all their different funds. And as a custodian, they found that the different FCMs that they were interacting with on behalf of their clients were just basically sending information to them in different, what I would call manners, different formats. So they were basically in a situation where they saw the whole ecosystem being what we call a little bit fragmented, inconsistent, and they thought that there was probably definitely a standard that needed to be put in place. So with that in mind, we got together, and the first thing we asked was, is anybody else was doing this? And we spent a few months on that, and we just couldn't find that there was anybody else kind of facilitating this kind of gap analysis and assessment of what needs to be dealt with. The second thing we did was we worked with the custodians themselves to agree on what was needed. And then finally, the third thing was that the custodians started out with the top 10 FCMs they dealt with. In regards to the products that we agreed on, we initially started out with U.S. products because of the mandatory clearing dates coming up, which the first hurdle was March 11th. And we focused on the 80-20 rule, which is basically LCH and ICE, LCH and CME, which is basically rates and credit. Once again, it was coming back to what the immediate pain points were. And we went through that analysis and basically determined that here was a standard that maybe the industry should embrace. And we went out to those initial top MCMs and basically validated that is their interest for them to do it. And we were rather surprised, pleasantly surprised that those core FCMs endorsed the concept of having a standard and agreed on this due to the fact that they were receiving numerous RFPs from the industry to receive the data. So for having a standard, they welcome that. The issue, going back to what Bob stated earlier, was how do you run this process going forward? And so, that's the history of that, and that's the catalyst of doing this. So Sapient basically, our role at the time was just to facilitate, organize, address the gaps, validate those gaps, and then basically determine the best way of moving this forward. Over to you, Judd, if you want to add any more to that or to expand on that.
Sure. Thanks, Jim. So, as a custodian and fund administrator, one of our primary objectives is to support cleared swaps accurately in a cost-friendly manner. We've spent quite a bit of time to identify data from the clearing brokers that we need for things like margin settlements, accounting bookings, position management, and reconciliations. I think reconciliations is pretty much key. But although we are currently seeing activity from only a handful of clearing brokers, we do expect for this to grow, and we fear that without a standard universe of data elements and agreement on the formats of this information, there will be, at best, a large effort to map and configure unique broker files, but at worst, we'll have misunderstandings or gaps in the data. So we now have a number of other custodians and fund administrators that are interested in this effort beyond the three mentioned. This also extends to other buy-side firms who may manage the post-trading activity in-house. I think they'll also benefit from this effort, too, more so if they use multiple clearing brokers. So as we're all cost-conscious and have plenty of large initiatives underway, this effort should help with trade processing accuracy and eventually a reduction in pass-through costs to all of our mutual clients. So in speaking for my firm and some of the other custodians, we're fully committed to this, and we're willing to have further discussions to keep this effort moving along. But with that, I'll turn it over to Karel.
Thank you, Judd. So going back to what Bob said earlier, we were approached over the summer of last year by Sapient and the three custodians driving the initial efforts to bring this under ISDA to see how at ISDA we could support this, and we, as Bob indicated, we're very happy to support that, and looked at how we essentially could leverage the existing ISDA infrastructure to push this initiative forward. So I'll spend a couple of minutes to talk about the governance structure that we have put in place and how essentially we are developing the standard and what the working groups are that you can get involved in if you want to get involved in the development of the standard itself. So at the top level, we have the CCS steering committee, and the steering committee, as you can see at the bottom of the slide, essentially has as two large constituencies. So on the one hand, you have the custodians and the service providers, and on the other hand, you have the clearing firms. So they're both represented on the committee, and obviously the committee is something that we can still expand over time if there are custodians, service providers, or clearing firms, for that matter, that want to participate in this effort. The steering committee is similar to other ISDA steering committees that we have, and in particular the FPML standards committee. So the committee has a fairly formal structure with voting capabilities if necessary. But essentially the mission of the steering committee is to oversee broadly the work in the different working groups, to prioritize the proposed changes and prioritize also the resources that we can put towards that, and very importantly to promote the adoption and see what we can do to further expand the use of the standard. So that steering committee started meeting in November of last year and has been meeting once or twice a month since then. The current focus is essentially working towards the June 10 start date of client clearing, and Phil will later on talk more about in detail what will be in that first version 5.5 that the firms are working towards. The steering committee also looked at what are kind of the next steps, so what do we want to do in additional coverage, both from a clearinghouse perspective and coverage for eyes is one of the things that has been highlighted and that the working groups are looking at currently. On the product side, the inclusion of non-deliverable forwards, and very importantly, geographically, to expand outside of the U.S. and to also focus on Europe and Asia. We hope that a lot of the work that we're doing currently will easily migrate and be usable in other jurisdictions as well, but obviously we have to do that analysis and make sure that it's covered. So the work itself happens in the working groups. We have one technical working group active now that meets on a weekly basis that essentially looks at the details of the standard. And depending on how we push, for example, developments in Europe and Asia forward, we might create specific working groups in those jurisdictions as well. So that's kind of on a high level an overview of the structure that we do have in place. At the end of the presentation, there are a couple of links. There's more information available on both the ISDA website and also the FPML website on the structure of the committees, and also if you want to download the standard itself. So with that, let me maybe check if there are any questions from people in the audience on anything that we have been saying so far, because I think that the next step will be Phil going into a lot more detail of the standard. So I think if there are questions on scope, governance, why are we doing this, this would be the right time, I think, to ask those.
You can use your Q&A panel if you'd like to ask any questions over your computer. If you'd like to ask a question over the phone, press *1 on your telephone keypad, and you will be placed in queue.
There are no audio questions.
Here we go.
All right, so then let me turn it over to...
Yeah, there's a question right there. Phil, you want to take that one?
Yeah, so Stuart Elson is asking what is the existing CCS format. And CCS right now is a specification for a CSV file. And what we have done is that we've locked a summary level report, which we're working to implement by June 10th. And the firms have committed to being able to receive the file. Here's our timeline for that. And then the details and positions report is still in progress. That has the NDFs. We have the report together, and I'm going to go through it with you in a few minutes. but that is still being looked at in the working groups to make sure that it meets the needs of all the constituents.
So this is Jim Bennett. I think I'll take the next question. It says, what do you mean by clearinghouse support? Isn't clearinghouse support standard across all FCMs? So really what we're talking about here is the FCMs pushing out the data to basically their user community and generally the asset management community. And Judd, by all means, you step in here and clarify this. Provide, they look at the custodians and service providers to do their support. So really have two pods of activity. You have those direct clearers and their activity, and then you have basically the asset manager end users that generally leverage service providers. And what we're talking about is that we're focusing on the products that are being generated from the clearinghouses, and the first two areas that we focus on were rates and credit because of the mandatory clearing date, and also that was the push, especially around Dodd-Frank in the U.S. So that those product sets produced from LCH and CME had a standard that basically the community would agree on and work on. Karel talked about we want to extend that, so Karel and I are going to try to meet with the Singapore Exchange when we're in Singapore, the ISDA forum. I've had some discussions with Eurex, and we're moving that forward. And each clearinghouse has participated with us. They've endorsed the standard and trying to help the industry. But technically, it's the FCM and their clients and their indirect clients that we're working with. Judd, do you want to add to that, please?
No, I think you're spot on with working with the exchanges. The buy side that's generally impacted is, it's multi-tiered, right? You have asset managers that custodians and fund administrators do things like back office work or striking their NAVs and things like that. You also have pension funds who have engaged asset managers, and custodians are kind of their official books and records. We provide accounting statements and do their tax statements for them. We also provide performance reporting. So it's a really deep and broad service that is provided for the people that will actually effectively pay the bills. So in essence, I'll go back to the first point that I made, and one of the points that Bob made is that trying to do this for the buy-side clients to lower the costs throughout the community. Jim?
And then what's happening is we've had a few buy-side clients working. They were key clients of the custodians reaching out directly to their FCMs and direct clearing providers to put a little pressure on, saying that we endorse this. We want you to do it. It goes back to what Judd said. We're trying to reduce operational risk and try to reduce operational costs by having a standard. So, Cynthia May, for instance, at Pickel, has been very active in this and very keen to support this activity going forward. So, they see that, and ultimately we all know that as we move OTC to the CCPs, cost is a consideration. So anything we can do as industry to reduce that cost, and it's greatly welcome. So, Karel, you want to answer the next question?
Sure. The next question is which firms have committed to code to this file format? So in principle, it's all the firms on the steering committee, and the steering committee list is the list that you find on that previous page 3. Obviously, we are still working on the final version of the file format, and there's the build and testing that needs to happen. So ultimately, if all firms will be ready for June 10th, that's still something that we have to see and evaluate. But in principle, at least the firms on the steering committee are committed to implement it.
We have another question up there from Steve Engel, and it really says that, he says TPAs, but there's other forums out there about supporting this. So we've had discussions with Arcadia Soft. We've had discussions with Geneva Advent. We've had meetings with the Calypsos and Murex of the world and the GMIs, and they all welcome the standard. So what we're talking about is a standard, how it's adapted within the target environments that the different users utilize. We welcome that. We also have had discussions with IBM Algo. We can keep on going. So what we're really doing is we're sharing the standard and how it's adapted. We highly encourage, and I think that's something that we encourage, but we're not really doing an edict and saying you must follow the standard and implement it in X, Y, and Z. So we're trying to keep it open and flexible. So Phil, do you want to add to that at all?
Yeah, there's another question that's related saying, will the format be exchanged between FCMs and clients as well as FCMs and CCPs? And the answer to that is that the standard is free and open. So we're making the file specification available. It's on the ISDA website for download. And so that's really between the FCM and the client. Obviously, it's going to relieve an operational burden if all firms are able to send in a recognizable format for all the constituents using these products. And I think that there was a question about cost reduction, so I think that answers that as well, just that this will enable the automation of reconciliation, and that's where the cost reduction will be in large part.
All right, so as more and more organizations adopt this, and you end up having a standard that it's less built as you go forward, and you get more scale. And so for the large FCMs, they can turn around and send that out in one manner. Within the custodian services, they can provide one kind of link. So, coming out of the gate, the answer is, it's dynamic right now because this is new, mandatory clearing. We're all trying to move forward on it, but we definitely see this bubble coming forward, especially on the next 2 cycles of clearing, and then these new products and new exchanges coming up and adapting these new activities. And then on the format, Karel, you want to talk a bit about where we want to see it with FPML? Or
Sure, happy to talk about that. So one of the points that we discussed early on was should this be an FPML format or not? The initial format obviously was not FPML, and we discussed that with the FPML Standards Committee as well. And the intention is that longer term, that's where we want to go. Short term, we do not have it in an FPML format for a variety of reasons. But one important reason is that the goal is slightly different, where a lot of the FPML work is focused on messaging, essentially real-time messaging. What you're talking about here is more a large file to use intraday at the end of the day, but it's still like a file, so the mechanisms to transport that, etc., are different. So where we want to ultimately converge and be consistent, we don't think in the short term that is necessarily the priority we should be focusing on.
There's another question up here. Does the standard also support netting reports? One of the things that we've seen as a collective group is that the market not only endorsed this, but they've also jumped to the next couple stages of how to leverage this. And one of those is, can you get the data and can you net it? Can you report it? Can you make our lives a little bit easier? And the answer is, yeah, we'll work with everybody and we'll try to do that. But before we do that, we have to adapt the standard. It's like the chicken and the egg. So really, as a collective group here, is just to get the standard adapted and rolled out, and the side benefits from that standard are going to become quite obvious, which is the connectivity, utilizing that data, maybe doing netting, and then reporting that data. But at this stage, we're just trying to get the standard embraced and meet the needs that are out there, and then I expect to see that evolution going forward. What do you think, Karel?
No, I definitely agree with you.
Yeah. And Judd, you want to add anything to that?
No, I'm in agreement. Thanks.
Yeah.
Right. I think at this point it probably makes sense to turn it over to Phil and go into more details of the standard, and then we can deal with those questions and any other questions that people have at the end of the webinar.
Okay, thanks, Karel. So this is the standard file itself, and as we have been saying, this is really to facilitate and make available an electronic margin statement. So this cover sheet gives the specification of the report. We have the different levels of reporting, which I'm going to go through here. You can see summary level data, which is what we've locked and are implementing for June 10th. Then there's details and positions data, which gives product-specific information. And then the third phase is going to be these daily reports, which does include a netting activity report for netting of IRS, for example. And on this page also there are some notes for how you code to the files to enable automatic receipt, because that is the purpose after all. So moving into the summary report itself, the first column you can see contains C, H, and D. That's to indicate whether the row contains data or a header or a comment, and it should make it really easy to customize the reports and make it really clear where the relevant data is being stored. So I'm just going to go through the section headings here. Row structure gives some more granularity into the data structure, and I'm going to come back to that later, but it's what really allows us to preserve a lot of the flexibility that we found that clients need in these reports. So the report information section shows the date that the report is referring to, and also the date on which it was run, and seeks to provide some insight into who is providing this data. So we have the clearing broker name and LEI there. Then there's account detail information, and that's going to give you the base and local currency, as well as the identifiers for the client. The amount settled section is simply for convenience sake to enable people to exchange and verify the amount of the call from a previous report. So at the end of this report, there's going to be a section that says to be settled, which is the margin call, and so there's also on the same day going to be an amount settling probably, and you can report that here. We have initial margin sections and variation margin sections that gets into some details that might be necessary about how that's being generated. And then we also have the interest, PAI, coupons, and fees. And all of those can be either netted against the initial and variation margin, or they can be paid separately. So what we have in the to be settled section here is a lot of flexibility around how many payments the client will want to send. So basically there's an option to send 1, 2, or 3 payments. And I'm going to go to the sample data file where we've put in some typical data just to make this really clear. So here we have these examples are broken out by client, and again this information is available for download on the ISDA website. So client A gives an example where we're going to use all 3 of the different payment methods that I just outlined. So if you scroll over to the to be settled section, you can see that account 1 of client A is settling IM and VM separately and commissions separately. Account 2 of client A is just having a net IM VM and then a separate commission payment, and account 3 is going to net everything into one payment. So again, we wanted to make that as flexible as possible because we've found that different clients have different needs, and so this is able to accommodate all their needs in one standard format. Now, the other examples on here, a lot of them deal with currency. So examples B through E are all differentiated by the currency option that the client has chosen. So client C has multiple accounts and multiple currencies, but they're going to net it all into a single payment for each account. And the account here we take to be at the fund level. So if there's any confusion, these are the actual funds that are the clients of the clearing brokers. So then the next example, they're just breaking out commissions separately, and then below here, they have chosen to settle in the local currency for each line. So each line actually has its own IM payment amount. Now, coming down, what I'd like to highlight now is this column that's called the row identifier. And the row identifier allows you to specify the different levels of subtotaling that you're going to use in the account. So you can see that most of these say local currency, which, because we are differentiating the lines by local currency, but these other examples go by clearinghouse and by account group, which is our placeholder for product type. We did that in order to be more flexible. But if you look here at client H, you can see that the row identifier says client account ID, clearinghouse, and account group. So we're going to subtotal by all three of those indicators. So the first line are all of the IRS positions at CME. The second line is CDX at CME, then IRS at LCH, CDX at LCH, just a subtotal of the CME accounts, a subtotal of the LCH accounts, IRS, CDX, and then a net, which gives their net margin call. So I do want to mention that we have a wider version of the summary report. Not all of the fields are being implemented for June 10th because we wanted to move forward with the fields that our constituents felt were the most important, and to have a simplified file to ease the implementation. There are other fields listed here, such as sub-account, and those are really optional and will be implemented in further stages according to the steering committee. So now I'm just going to briefly get into the details and positions and some of the daily reports. The details and positions report is being analyzed currently in the working group. We've recently added the NDF section, and this already contains IRS and CDS. So you can see here we have all of the descriptors for IRS trades and CDS and then NDFs. So this would be used to give the positions that are kind of the basis for the margin call report. And this also contains information about collateral positions. And we know that most of the time the different products and certainly collateral is broken into separate reports. And you can certainly still do that while using CCS because you can send this information in as many or as few reports as possible, and the file structure is built in such a way that it can easily be automatically brought back together or separated out if that's what you want. So this is the netting activity report. This is one of our daily reports, which will allow counterparties to exchange information on trades that have been netted today. There's also a daily reports for interest rate swaps, daily reports for credit default swaps, non-deliverable forwards, collateral, and terminated trades. So then finally, a very important section of the report is the the description dictionary, which describes each field and gives a format requirement which is based on the FPML standards, so that will reference the XML schema and the ISO codes where appropriate. And these descriptions will really help everyone to understand exactly what's being looked for in these fields, because of course we found that different firms will call the same data by different names in the world of OTC trading. Okay, so again, this is all for implementation according to a timeline which is determined by the steering committee. The first report that I was showing you, the summary report, has been locked, so there won't be any changes made to that until after June 10th, at which time it will be able to be changed by a motion in the steering committee. The other reports are being vetted, and once they are locked, we will come up with an implementation timeline for those as well.
Phil, I think Declan wants to mention something there.
Yes, so Declan is asking about cash flows, and I think that is referring to the coupons and interest, which in the summary report we have fields for those, and they are to be netted against the initial margin and variation margin calls. The details and positions reports breaks them out in greater detail so that you can see the excess on cash balances, interest on excess cash balances as separate from coupon interest, from PAI, etc. And you can even specify which index the interest is accruing at.
There's a few more questions, Phil.
Yeah. So is collateral attributable to an account versus a position? As the standard stands, we have the positions are attributable to accounts, and the collateral is as well. So there's flexibility in the details and positions report to have different positions listed separately with their collateral, the appropriate collateral, or you can simply give collateral positions at the account level. So there is a section on the ISDA website, and we will send that URL to all of the respondents for the webinar.
Yeah, so there's a question on where the information can be found, but so that the standard itself is available already on the ISDA website and on the FPML website, and I believe in the presentation, a couple of slides further down, there is the direct link to it. But in any case, we'll send around that information, and we'll also make, by the way, the slides available both on the ISDA and the FPML website. And then there's also contact information in case you still would not be able to find where to download the standard.
So there's another question about when different currencies or different assets are involved, how do you determine the settlement and cash dates? I think that the best way to do that would be to have a separate line for each of the currencies. If the difference between the settlement dates are important to you, you can report those amounts on different lines.
And then once you read out the question from Richard Henderson, I think Judd might be the best person to answer that one.
Okay, so Richard is asking, will this add more pressure for the buy side due to the proximity of the June 10th deadline? And will there be ancillary benefits for the buy side?
Judd, can you answer that?
Yeah, well, June's right around the corner. Speaking from my firm, that we have good connectivity with about 5 and working towards the 6th clearing broker. I think our focus is more on September, just due to the mandatory clearing for many, many more of our clients, the pension funds, and a lot of the asset managers' activities that are for those pension funds. So I'd love to say that this would be very beneficial for the June date, which is kind of where most of our focus is, but I don't think, realistically, I think it's going to be more beneficial to September, and we still have to just get by throwing more bodies at it until that date.
And that's, hey, Judge, just let you know, that's what I'm hearing across the board, so thank you. Yeah, Phil, scroll down and see if there's any more questions.
So we had one question asking if this was at the transaction or position level, and the CCS can handle either trade information or position information, but it does not handle the full trade details. So it's really given at the position level, but you can have a line for each trade if you want to. Okay, so
I think there's another question saying that the clearinghouses themselves have similar reports. The answer is absolutely. The question really is that this standard here is more from the clearing members to their clients. So it's post that and how that data is being sent. And so that's really the current pain point. What we have been doing is talking to a couple of clearinghouses on keeping in sync with the standards and keeping them informed. But really, once again, it's the direct clears to their clients that is the current the challenge.
Okay, should we see if there are any questions on the line?
Absolutely.
There are no audio questions.
You want to go to the next slide?
Oh. So this is an appendix to the deck which gives a timeline for Dodd-Frank and EMIR phase-in and time.
And it mentions that September deadline that Judson was talking about earlier on.
Absolutely. And we're continually expanding the products, the exchanges, and the file format as we go forward with the different working committee members. And then I think going back to Karel, we welcome anybody who's out there that is not a member or involved. And once again, this is open and available for the industry to solve this common problem.
Okay, so there's a question, is there a communication plan from FCMs to their clients, and should clients expect to hear from the FCM when they're ready with the new standard format? I guess it's more a question for the FCMs, which we don't have on, but I don't know, Jim, if
yeah, is Emma on the phone? Emma from JP Morgan?
She's not speaking.
Yeah, what we're hearing is that right now, and Judd, please, I'll expand on this, is that the FCMs are working with the custodians and partnership, and it's more like a kind of reconcilement effort, client, service providers, and FCMs to get in sync to meet the needs of those counterparts, and it's in a very collaborative effort as they're going forward. So I think, as the clients are coming on board, they're working based on each client. So what we're hearing from the FCMs is that they're reacting to their client demands and dealing with this, and then also working with the custodian. So there's two, what I would call, pressure points from the FCMs to kind of move this thing forward is their clients and then the service providers. Judd, you want to expand on that?
Yeah, you're spot on. With our experiences, we've when we start talking with a client and they identify who their clearing broker is or their clearing brokers, they put us in touch with a contact at the clearing broker's firm, and then we kind of introduce this is the CCS, the standard format, and then we start talking them through what it is, how to interpret it, what the data fields mean, and start working towards more of a project plan to implement this. In a couple instances, in all instances, we've pulled in Sapient, or at least introduced Sapient to facilitate this from the clearing broker's perspective, because it could be considered just pretty large effort, so they might need a little assistance with interpretations. We're happy to do this as the custodian because we're very familiar with it. We've been down this path. We've tested with, as I said before, half a dozen clearing brokers. So we've got some experience here, and I think State Street and BNY Mellon would say the same thing. But it is always helpful for those firms to understand that they have other firms that could help them out, i.e. Sapient, who's very familiar with this and has the bench to come into that shop and add a little more color to the file. So that's our experiences with this.
All right. At this point, there are no further questions, at least not the questions that we get in online. Maybe let's do a last check if there are any questions on the phone.
And there are no audio questions.
Okay, and if people want to send in any other questions they have, this is the moment to do so.
Then also, Phil, you might want to put in the email contacts for those that want to do it offline. Why don't you take everybody through that, please?
Right. So to request a copy of the CCS, you can email ccs@sapient.com or refer any questions there. You can also contact me directly. My email is given there on the screen and my number. Or you can call ISDA and speak with Karel Engelen. His number is given. And this is the link to the repository on the ISDA website where you can download this presentation, the standard file, the sample data file, and some of the information about the steering committee.
Karel, do you want to say anything about the ISDA event in Singapore and how this might be highlighted and raise that?
You want us to enter a little bit of promotion?
Go for it yourself, yes.
Thank you. Yeah, so there's the AGM, the annual general meeting in Singapore at the end of April 23rd to 25th.
Yep.
And so one of the panels will talk about data reporting and everything related to that, and one of the topics on that panel will be discussion on CCS standard and how that will improve automation. So certainly if you are attending the AGM, certainly come to the panel, but we'll also have an FPML booth with more information if people are looking for that, and I think Sapient will be there as well. So we'll definitely be able to help you out.
Yeah, Sapient will also have a booth, and we'll both have it on there. So.
And Judson will be one of the speakers on the panel, so we'll be able to give you even more detail there. Okay, so there's one question that just came in on the stage of the talks with the Singapore Exchange and Eurex.
So on SGX, we're going to meet them, Karel and I, just to start the process on Tuesday of that week. Eurex met with the president of Eurex at FIA Boca, and they're quite keen to adapt this, and they're organizing a meeting internally with the right people to get behind this and support this. So I've gotten commitment from them, and that's kind of where we are on that stage, right? And then I think on ICE, Jim Newsom wants me to coordinate with Chris Edmonds on ICE clearing. So that's being scheduled by Newsom, and we'll expand on that too. Yeah. So we got the right senior level of the different exchanges to move this forward, and then also I think I'm going to stop by and talk to the Tokyo Stock Exchange that Friday, since we're in Asia, and that's being scheduled as we speak. Just a very high-level initial discussion. Yeah.
And generally on the steering committee, obviously a lot of focus has been and continues to be on that June 10 date and the September start date. But certainly the second half of the year, I think some of the focus will shift towards Europe and Asia.
Yeah.
All right. I think with that we pretty much covered what we wanted to cover, and we went through a fair amount of questions. So I think at this point we probably can close the webinar. So I want to thank the speakers that made the time available to participate, and certainly want to thank all of you as well for attending. And again, if you have any follow-up questions, the information is there, and you will find that on the website, and you will get an email with that information as well.
And we'll also have this recorded, and we'll have this published so that you can share within your own organizations if those that might have missed today's call.
All right. Thanks, everyone.
Thank you.
Thank you all for your questions, and thank you again for joining us. This concludes our program. You may now disconnect.